Gold consolidation is not quite done, and a complementary pair of strength that make up safe haven assets for the 21st century. Hear it now with Florian Grummes, Managing Director of Midas Touch Consulting, on this edition of Metal Money. I'm your host, Patrick Vieira. Florian Grummes, welcome to Metal Money. How are you doing?
Thanks, Patrick, for having me. Pleasure to be here. Thank you. I'm good.
Glad you could make it here. And with so much uncertainty going on, the disconnect with the markets, the never ending stimulus, they all signal that the economy is not doing very, very well. So I'd expect the sentiment for gold to be rather good. Why are we still looking at a correction in the cards?
Well, first of all, I think it's important to understand that we've seen an upwave in gold for 2 years. So the last important low in gold happened in August 2018 at $11.60. And since then, gold basically gained $900 in 2 years. And that was nearly an up move of nearly 100%. So it's just totally normal, healthy, and actually logic that the market had to pull back a little bit to digest these big gains. And we've seen super bullish sentiment in July and August. Lots of retail traders bought into these high prices. And it takes time. The market has to adjust to this new level. I think generally, that all the markets are moving 1, 2, 3 steps ahead, and then they take a step back to digest what was happening with this move. So it's a totally normal environment. And I understand that gold bucks, and especially the little bit less experienced, maybe they don't get it together with the big picture. But in the short term, markets can do whatever they want. It goes up and down. They are volatile. And I think it's actually a blessing that they came back. It will give us good opportunities to buy cheap into some of the mining stocks. Some of them came back 30, 40, 50% already. And also with silver, you will have, or did see already last week, a nice buying opportunity, and you probably will see another one. Because I think until the election, it's likely that we get one more pullback at some point. And what we've seen short term over the last 2 weeks basically was just a bounce from oversold levels, pessimistic sentiment, especially in the stock market, by the way. I think we've seen some of the largest short positions in the stock market, and that basically, created a short squeeze over the last 2 weeks, and that basically, that kind of risk on mood also pulled gold higher than. But let's see, for the next few weeks, I would be patiently waiting to add more on weakness. And then I think in the first quarter 2021, so within just 3 months, I think typically you have a strong start from the seasonal perspective for the precious metals, and you will probably see most of the mining stocks moving sharply higher again.
Okay, so if there's a correction, we're going to be seeing a healthy correction.
Right. Maybe let me add something. I mean, that's something I learned myself painfully 10, 15 now. I mean, I started in the precious metals sector 20 years ago. And the first time I bought mining stocks, I thought it makes sense. All fits together. They have to march higher. And then quickly I found myself 20, 30, sometimes 40% underwater with those positions. And it took me quite some time to understand and learn that the precious metals mining sector is so volatile, and you have to be really super disciplined and patient. And the only thing you can do is you need to buy low, you need to buy weakness. It's a little bit different than in the stock market, where you're not getting that much punished if your timing is bad. But in the gold mining sector, or the mining sector in general, you get punished a lot if your timing is not good. And you need to be patient, you need to be disciplined, and you need to wait and let the market come to you. You have to have deep limits, low limits, and not chase these rallies like in summer. If you bought into mining stocks in July, you are underwater today. And actually nothing has changed. The big picture is the same thing. They will print much more, and it's going to be at some point inflationary, at some point even hyperinflationary down the road. But in the short term, your timing was bad, and then the mining sector is punishing you.
Okay, that's a great point. You mentioned U.S. elections are coming up. What are you seeing as far as the gold price action prior to the elections and perhaps after the elections? Are we going to see a significant difference?
Generally, markets hate uncertainty. and that's true for all markets, and all markets are connected now. I'm of the opinion that we are in a cracker boom, so everything is driven by liquidity, and the central banks and basically all central banks are pumping in liquidity like crazy into the system. So all markets move up together, all markets move down together. And in front of this election, it's uncertainty that markets hate. If we don't get a stimulus rather soon, but maybe later, or even one of the two parties is doing a contested progress, then it could take us until maybe January that we have clarity who's going to be the next president in the United States. So during such a situation, the market will probably move lower, could move even sharply lower, and that will drag everything lower. So if that would happen, I would view it as a big opportunity, especially in gold and silver and the mining stocks. And once the market sees or is starting to pricing in the clarity about the stimulus package, you will see gold outperform the stock market again.
Where do you see the gold price heading to short term and long term?
So for gold in the short term, I wouldn't be surprised to see prices at some point over the next maybe 2 months meet with the 200-day moving average in gold. So that moving average currently is trading or running around 1746, but it's moving higher every day, about $2 to $3. So give or take, I would say around the election, mid to end of November, maybe this moving average should trade around 1800, and I would expect gold to pull back into that zone still. And for silver, this moving average trades around 1943, something like this, and this is 23% away from current prices actually. So this moving average and silver also rising sharply. So yeah, maybe 21, that's I think the low side that I see in silver for now. And if you ask me for the next year, mid to long term, well, once gold takes out the all-time high, I think we will quickly run towards $2,500 and then probably even run against $3,000. And you will see that volatility probably is increasing. And then at some point, $100 up and down on a day is probably nothing untypical anymore. And then you could also see pullbacks of $300, $400, $500 within a few days or weeks. And then at some point, gold will take out 3,000. And yeah, I think for the next 2-3 years, it's very likely that we move much higher in gold. So the most important thing is really stick with it, make a buy and hold strategy here, because trading this short-term volatility is really only something that professional traders can do, who have very strong nerves and really know what they do, and especially have a very good risk management. And that's something that usually retail traders don't have.
Okay, so buy and hold. All right. Silver, it's still roughly about 50% off its all-time highs, and we've seen gold move past its all-time highs. What is it going to take for silver to finally become that silver slingshot that all of us are expecting it to be?
Remember from the last bull market, 2001 until 2011, this was a 10-year bull market in precious metals. But the real fireworks in silver started in the last year of those 10 years. So it started to run basically in 2010. I remember in summer it was still trading at $17, and then just 9 months later it reached $50. And up until that final rally in silver, it has been always kind of like lagging, confusing, doing weird moves, large pullbacks. So I think it will be a similar signal like the one that we had this summer, when silver finally, after gold being in a rally for 2 years, finally silver started to catch up, and then really viciously, super strongly catched up within just 2-3 months, and even in the end ended up being faster than gold. So we have to be patient with silver. It's a schizophrenic diva. That's how I like to call silver. You need to understand that it's huge volatility, crazy moves, confusing wherever it can. And again, the best strategy is to just hold it. Don't try to trade this. And I think once we are getting closer to the big final stage in this precious metals rally, and this could still be 2-3 years at least away, then you will see silver really exploding. But I wouldn't be surprised to see silver at least reaching its all-time high around $50 in the next year.
Okay. Yeah, I guess if we look back, we had seen the silver to gold ratio at about 125, and it's come all the way back down to low 70s. So I guess silver is slowly starting to make that move. Florian, question. You stated that gold and Bitcoin are a pair of strength, a complementary unit of a true safe haven in the 21st century. How do the two
Right.
complement each other?
Well, very simply said, the one is analog and the other one is digital. So you have gold coming from the material, the physical world, thousands of years of history, and a proven way to basically protect yourself against whatever has happened in history. And now that mankind is moving more and more into a digital society, thanks to the internet, we are all connected. You might also need something in the digital space because, yeah, things accelerating, things are changing. I think my generation has been the last generation that grew up in an analog time without computers, without internet, without cell phones. Now the newer generation, they don't even know how it is without living without internet or cell phones or smartphones. So, however, we are still living in that physical world, and at the same time more and more in that digital world. So you want to have a safe haven for both of those worlds, I would say. And I believe that these complement each other very well. So as I said, gold, 5,000-year-old track record, has survived any kind of dictatorship, any kind of paper money system. And now with Bitcoin, the best performer over the last 10 years, Bitcoin has outperformed everything else, and it has, even though it's one of the oldest blockchains, it is still not being hacked. It is very reliable until that day. It has actually long time already moved above the threshold where it was maybe critical in terms of the network. Now there's so many thousands and thousands of computers and nodes running the system, you cannot stop this anymore. And I believe together they are a great pair of strengths, and they are both outside the mainstream in the normal financial system. So governments and central banks cannot create gold out of thin air, and they cannot create Bitcoin out of thin air.
Great points. Analog and digital. Never thought of it that way. But Florian, I can do you one better. You say you grew up in a time without computers. I grew up in a time where we had 8-track cassette tapes. Florian Grummes, we thank you for your time, and we hope we can do this again.
Thank you very much. Thanks, Patrick.
There you go. Be prepared to buy the golden dip. Volatile price action ahead with the looming U.S. elections, and digital gold can be complementary to physical gold. Keep it liquid, keep it real, and I'll see you on the next edition of Metal Money.